Hello and a warm welcome to South Central with me, Jude Sanath. You're watching India's first and only business news bulletin to put the spotlight on South India as we cover key news and updates from the region. On to our top story first. The AI boom is no longer just changing the way software is written, it's beginning to reshape the workforce behind it. In the last few months alone, we've seen a string of high-profile announcements from South India's tech ecosystem. Chennai's Freshworks and SuperOps have cut jobs as they double down on AI, even as Bengaluru-based Krutrim and Whatfix have restructured teams, while Opendoor has shut its India operations altogether, citing a shift to leaner AI-native workflows. And while these numbers are still small when compared to the millions employed by India's IT industry, the psychological impact could be much larger than the absolute count. After all, in cities like Bengaluru, Hyderabad, and increasingly in Chennai, the technology sector just does not drive employment. It underpins the housing market itself. The first apartment, the upgraded villa, the second investment property, much of all of that demand has historically been fueled by well-paid software professionals confident about their future earnings. So already we're seeing signs that uncertainty around AI-led restructuring and slower hiring is making buyers more cautious, with industry observers reporting longer decision cycles and some first-time home buyers putting home purchases on hold. So is this merely a short-term pause as the tech industry reinvents itself, or could the AI era fundamentally alter the demand dynamics of India's biggest technology-driven property market? And what does it mean for developers, banks and home buyers across Chennai, Bengaluru and Hyderabad? To help throw some light on some of these questions, I'm now joined by Puravankara's CEO for its South markets, Mallanna. Mr. Sasalu, firstly, thank you so much for joining us here in South Central. Always a pleasure to have you on the show with us. Now, I am not for a moment, Mr. Sasalu, suggesting that correlation equals causation, but the fact is you're seeing at the height of job cuts driven by AI, unsold inventory across key markets also going up. In fact, some of the latest numbers I have with me here say that Bengaluru actually saw a 23% spike in unsold inventory in the first 3 months of 2026. Given this scenario, is the industry perhaps a little concerned that at a time when jobs are being cut on account of AI itself, there could well be a possibility of home buying slowing down?
Jude, thank you for having me on the show. It's always a pleasure to be here. Just a few pointers from what I said. While you're saying the unsold inventory is going up, which is true because that we've got some good launches in the first quarter, that is the first calendar quarter of the year. At the same time, if you look at the sales that has happened in Bangalore, I think it's really a 40% raise compared to the previous quarters, and similarly 24% in Chennai and Hyderabad. So in fact, we had really strong the last quarter of the previous financial year or the first quarter of the calendar year. Coming back to the AI and the job generation that may slow down, and it's whatever we see and whatever is being reported is only marginal. It will make some marginal effect, and materially, I don't see this as having any impact. There could be some rebalancing, and rebalancing of the jobs could happen. So it has always happened whenever we have seen the technology shifting from one to another, from what we used to be when you look at from 1995, 96, when there were hundreds of Microsoft systems engineers and there were Cisco certified engineers, hundreds and thousands, millions, in fact, across the world. Those jobs are not there anymore. Similarly, we have HTML, Java, and VB, VC++. And every time that there is a technological shift, that we come to this conclusion that there may be a job losses. The job losses that what we see is only marginal, and it is only a cue that's saying that now the things are going to shift. Particularly, in my opinion, that I'm not a technology person, a real estate developer, a civil engineer, but from where I see and what I see is that when there is a technological shift, and more jobs are generated. For example, that if you look at ourselves, we have 1,800 people company with 20, 25 years of data that's available with us. For us to implement AI, we've already recruited a couple of agencies, and tens of engineers are working in making sure that the data is kept in certain way that where your large language models can look at it and provide us the knowledge. Just imagine the large players, the large banks, when they are doing similar things, that you will see that there is a lot of jobs are going to get generated. So I'm not unduly worried, considering that GCCs have stepped up, and in the first quarter, still the quarter is not ended in the year, that we have already leased around 20 million square feet as an industry, and out of which almost 9 million was taken up by GCCs. Around 200,000 jobs have already been created, and we expect that the GCCs to continue to do very well till the end of this year. So overall, I think we are still in a great market, particularly Bangalore, Chennai, Hyderabad. I don't see any reason why there will be more job losses. Job recalibration may happen.
Right. Absolutely. No, Mr. Sasalu, I completely agree with what you're saying. In fact, the number of additions by way of, like you rightly pointed out, the GCC boom, and the fact that job losses owing to AI have only been marginal. The fact is, and I'm sure you'll agree with me here, the psychological impact of what's been happening, one would say, weighs heavily on real estate purchases. In fact, let me take a look at what one report in particular has recounted as some of the key reasons why you're seeing unsold inventory go up, even in the shadow of these job losses. You're seeing, firstly, the possibility of a lot of prospective home buyers delaying purchases, opting to rent longer. A lot of people are hoping to keep money in the bank and save up for a rainy day, given the number of big-ticket names that have actually gone about announcing job losses. You're seeing tighter bank scrutiny as well for multiple possible employees, especially those involved in the tech sector, given the uncertainty with regard to the future existence of their jobs. A lot of folks are waiting for, in fact, better real estate deals, given the fact that prices have also been on the ascent in the recent past. So a combination of all of this, and led by the psychological impact of job losses hitting the headlines day after day, from companies like Freshworks, SuperOps, Whatfix, Open Door, in fact, shutting down their entire India operations. Surely the psychological effect of all of this must weigh in heavily on purchase decisions. Are you seeing prospective buyers perhaps taking a little longer to get back to you with regard to buying decisions as opposed to before?
I think what we are talking about is a collective consumer sentiment. Collective consumer sentiment gets affected by various reasons. There is West Asia conflict that is going on, and there have been elections in India, governments changing and the leadership changing and politics taking its own way. And so there are quite a number of things that happens at the same time. Because of the West Asia conflict, the oil prices went up and the rupee started sliding down. And so, yeah, this kind of puts a little bit of that a small stress on the mind of the people when they are in making their biggest investment. I don't deny that. At the same time, that the sales of the buying of purchasing of an house is not a momentary decision, right? It is a decision which has been taken by the people after after thinking for several years, 1, 2, 3 years. The people would have prepared their mind to go and buy a house. Who are our customers? Our customers are 35 to 45-year-old people. That means they've already seen these cycles and they've already got 10 years of experience or 10, 12 years working experience. And also they have dual income and they'll have some savings. And so if there is anything that might have got people to think about, delaying their purchase, is maybe because the prices went up quite drastically since 2022 to 2026, almost 30%, 40%, 50%, depending on which micro market we are talking about. And wherein the right size and the right place and the right price still continuing to do well, and we're not seeing any kind of slowdown. However, having said that, there are large format residences with large ticket size. Maybe people are coming in maybe once, twice, thrice, and maybe there is a delay in decision making, but even we are selling that as well. So coming back to the AI and the sentiments, and yes, the traditional IT services may go through certain changes, but still the cloud computing and the data engineering and the GCCs and everything that, then also AI implementation itself I think there is enough and more positive sentiments in the people's mind to still come and buy apartments for a longer plan in which they have for their life.
Right. So where does this essentially leave Puravankara, Mr. Sasalu? I know for a fact that you've issued a guidance of around 11,200 crore rupees for FY27. What do you do with regard to that launch plan that you have? Given that Bengaluru, for one, is seeing slightly swelling unsold inventory, and you're seeing launches perhaps in some micro markets or some markets exceed sales, do you stick to the launch plan that you already have, taking a bet that the jobs situation might well rebound and you will continue to see buying take place at a rapid pace? Or do you perhaps think it's the time to sit back, wait and watch and see how the job market pans out before going about launching new projects?
So we made this commitment just 1.5 or 2 months back, and then nothing has changed in our minds. Nothing has changed within the organization, the way we are thinking and the way we are conducting. Our launch plan continues to be what it is, and people are working towards that. If anything, that I'm actually pushing in the government machinery to get the approvals as quickly as possible so that we can do the launches as we have planned. And there is absolutely no change in our thought process at this point of time. This is also for us, importantly, that the overall sentiments in the real estate, particularly on the commercial space where the offtake is fantastic, within this in what the financial quarter is not even closed, and the industry has already leased out some net of 20 million square feet across the country, which means that it is quite positive, and we don't see any kind of slowing down. As far as industry slowing down and hence that we have to slow down, I don't think that we operate like that. And also we are a large organization, which is not, I know we cannot tap on and tap off a kind of a situation, because we cannot move like that, and we should have a plan, and we should be moving within that. And of course, the business risks continue to exist in any industry, and we have identified those risks and how to manage those risks and etc. to move forward. So I don't see that we are going to be changing. In fact, we've been quite aggressive in closing the transactions, new transactions. In this year alone, we've already closed 3 transactions, and we are working on a bunch of new transactions. And maybe if there is any sentiment which actually lowers down, I wish that the land prices has to come down so that we can do more deals and we can continue to do a better business.
Well, Mr. Sasalu, all I can say right now is that the real estate industry is one happy bunch, hoping to continue the momentum of those sales, while hoping that inventory levels, of course, give them just about enough comfort to ensure that home buying continues at a pace that's always been seen, at least this year, job market worries or not. But on that note, we'd like to thank you very much for joining us and helping break down some of those insights. Great having you with us here in South Central, as always.
Thank you.
Well, on that note, we'll have to slip into a short break, but on the other side, we'll have more from South Central when we return. So keep watching ET Now.